Good morning, ladies and gentlemen. It's Market Forecast brought to you by Options University. This is Butch Shorak, and it's Monday, April 21st, 2014. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money you cannot afford to lose. Looking at the week that just took place, we had a week that made up for the week before, as we saw the Dow moving up 381 points for the week, bringing it year-to-date percentage change of just down 1. S&P 500 in positive numbers. NASDAQ Composite down slightly, down about 2 points, and the Russell 2000 down about 2 points, as we picked up some of the losses that took place during the previous week when we had our pullback. Looking at the week to come, we certainly had an interesting week last week, as most of the announcements came in positive, and we saw our big gains take place in the market. Looking at the week to come, we got economic leading indicators coming in on Monday at 10 a.m. Looking to Tuesday, we have housing coming up this week with FA House Price Index and existing home sales coming in at 10 o'clock. And then as we look forward, looking at Wednesday, we see the PMI taking place, new home sales coming in at 10, which have been showing some stronger movements and starting to see some building going on. On Thursday, we got the durable goods order taking place before the market opens at 8:30. Also, every Thursday morning, we have jobless claims, which tell us about the employment numbers for the week before. And then finally, on Friday, April 25th, we have consumer sentiment at 9:55 a.m., and it'll tell us a little bit about how the consumer is doing in the overall market. Looking at the SPX for the previous week, we see that we are in our uptrend. We didn't come down quite to this trend line that we had drawn in, well above the 200-day moving average, as we saw relative strength in the S&P and the overall market. And we see that our uptrend continues, not yet, certainly not yet in a downtrend, albeit a bit of a pullback. Looking at the SPX for the week, we saw that as we looked at the 4 days of the trading week, Monday, Tuesday, Wednesday, and Thursday. Remember, we had a 4-day week last week, all showing us a bit of a climb, as we saw Wednesday, Yellen giving us some economic news that was softly spoken in front of the Economic Club of New York. And she reiterated her belief that there's more slack in the labor market than is reflected in the unemployment rate. So as we saw the earnings starting to come in, we saw reporting earnings come in with nice surprises from Citigroup, Coca-Cola, GE, Morgan Stanley, Johnson & Johnson, that either matched or beat estimates, has also helped boost this week, again taking us almost back to where we were, as we ended up for a high right around that 1870 level for the week, and we've got resistance right above us, as we can see from this level, which took place at the beginning of the month. And then ultimately we got all-time highs coming up there right around 1900. We'll see whether we continue on this trend to go give us new highs or not. Remember, we are no longer in the strongest 6 months of the market, and we'll see exactly what happens as we move forward. We're kind of at an influx point with that resistance just above us. We'll see if we break through that. If so, then expect an approach towards the all-time highs coming through in the market. Looking at the Dow, we saw that the Dow certainly gave us some big moves. And looking at the NASDAQ, we see that we went down to that 200-day moving average, almost down 10%, down 9.7% for the year, and we see that it hit that level and immediately turned around. That was the beginning of the buying signal for the NASDAQ, as the NASDAQ, the buyers decided that this was a good time for them to move forward. Next, taking a look at the Russell 2000, we see that the Russell 2000 also went down, hit that 200-day moving average, did not close below it, and used that as a point for moving up. And we're not seeing market leadership out of the NASDAQ and Russell as we did so much during the first quarter of 2014. As we would expect the VIX to pull back, our emotional indicator for the market, that's exactly what it did, closing at 1336 as we got rid of some of that volatility that was in the market earlier as the market began the rebound for the week. So, in all, it was a strong week there for the bulls as buy the dips continues on. It's still no change from the Fed. And, you know, we've got that rule we keep citing, don't fight the Fed. And as long as the Fed is there, we're going to have these roller coaster moves, but we're not certainly aren't changing our trend until the Fed changes its trend. Looking at the bond market, we see that the bond market kind of reached some highs for the year as we saw it move up and gave us new highs in that we would expect as the market begins to pull back. The flight to safety in gold, well, that just hasn't really taken place as we see gold kind of leveling out and staying right around that 125 for our ETF for gold. Looking at the volume for the week, what exactly did the spiders show us? Well, we see that Thursday and Friday, when we had our two biggest days, we again had about average volume, but we did see a pickup in volume early in the week on Monday and Tuesday. So as the market buy the dip took place, we saw the strength that was coming into the market based upon volume. Looking at the financials, so we would expect somewhat the same move as we got out of the S&P, and that's exactly what we're going to see as we see that beginning its move back up again. Overhead resistance just above it, 30 still above the 50, still above the 200 as the bullish market continues in our ETF for financials. Looking at oil, we see a bit of a crossroads, and this is certainly one of the negatives in the economy, is that oil's at a yearly high, and we see oil peaking out at 37.66 and showing exactly that kind of move in at our service stations when we pull in for gas. So for those of you that are gold members, stick around. We'll look at our stocks to watch, see how they fared in this market rebound. Some of these used to be leaders, and we've seen some changes take place as earnings and news come out. In the meantime, if those are not gold members, for more free videos, go to www.optionsuniversity.com/free gold. With that thought in mind, ladies and gentlemen, thank you for attending Options University Market Forecast. And it is Monday, April 21st, 2014. And this is Butch Shorak. And thanks for being here.